Welcome to Tick to Loot's weekly market summary for Friday, July 31st, 2026. This video is for educational purposes only and is not financial advice. Markets carry risk. Always do your own research and consult a licensed financial advisor before making any trading decisions. Let's walk through the key economic releases that shaped markets this week, starting with low-impact data from Japan, Europe, and China. In Japan, the annualized SPPI, the core price index, was forecast at 3.4%, a slight rise from the previous 3.3% reading. The market had anticipated a modest uptick, and a low-impact rating suggests limited immediate influence on yen volatility. Germany's IFO Business Climate Index came in at a forecast of 86.1, up from 85.6 in the prior month. Analysts view this modest improvement as a gentle signal of steadier sentiment among German firms, though the low-impact label keeps it from moving markets dramatically. The Eurozone's M3 money supply was expected to grow 3.2% year-over-year, matching the previous month's pace. With no surprise in the forecast, the data reinforces the current monetary environment without prompting major shifts in euro-related assets. Private loan growth in the euro area also held steady at a 3.1% annual rate, identical to the prior release. The consistency suggests credit conditions remain stable, a point noted by analysts as supportive of existing Eurozone risk assessments. The ECOFIN meetings were on the calendar but carried a low-impact rating and no new figures were released. Market participants typically treat such meetings as a venue for policy discussion rather than immediate market drivers. Turning to China, the July Manufacturing Purchasing Managers Index slipped to 49.2, just under the 50.0 threshold that separates expansion from contraction. The prior month posted 50.3, so the dip signals a modest slowdown, though the miss was not dramatic. The Services PMI also fell, registering 49.0 against an expected 50.2 and down from 50.0 in June. Together, the two readings point to a broader cooling in Chinese economic activity for the month. Despite the softer PMI data, Chinese robotics and automation stocks experienced notable gains today, reflecting investor focus on sectors that could benefit from longer-term industrial upgrades. Overall market sentiment this week leaned toward caution. The low-impact economic releases kept major indices relatively stable, while the Chinese PMI dip nudged risk-averse investors towards safer assets. With Japan's SPPI in line with expectations and Eurozone money supply unchanged, the yen and euro showed limited movement. The Chinese data, however, kept the yuan under slight pressure as traders priced in slower growth. The dominant theme this week was consistency. Most releases matched forecasts, reinforcing the status quo across major economies. The exception was China's PMI, which offered a modest reminder that growth momentum can ebb. Looking ahead, the calendar shows a quiet week with no high-impact releases slated. Traders may continue to monitor any emerging data from China and any policy commentary from central banks. That wraps up this Friday's market summary. Remember, this video is for educational purposes only and does not constitute financial advice. Subscribe for more weekly insights and, as always, do your own research before making any trading decisions.